Hello, guys. It's DannyDealz here. I have big news. Strong Arm Trading, one of the top analysts in the entire world, has initiated coverage on the SOFI stock, and Hurricane Lopez is here with an exclusive. Hurricane? Strong Arm Trading sets a price target on the SOFI stock of $9.75. Why? 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 Um, Why is SoFi undervalued? Why do we believe that SoFi will make an approximately 75 or 80% move to the upside within the next year? There are numerous reasons, but the easiest thing to do is break it down into three basic categories. Management. SoFi has superior management. Anthony Noto has navigated these endless student loan payment pauses with a dexterity and just a superior, flexible management style that they think very quickly and they move quickly on their feet and they adapt and they continue to grow and get closer to profitability. Their margins continue to look great. EBITDA continues to be very, very strong, as does top line growth, membership growth, product growth, and every other kind of growth including the guns. Okay, strong arm trading is obviously a bit of a joke. Seriously, as a serious analyst, DannyDealz puts a $9.75 target on the SoFi stock, and he does not do so lightly. Management, top line growth, and also the business model, focusing on a quality customer, focusing on good loans that are not going to go bad even when interest rates go up and the economy gets rough, focusing on diversification in the business model through the acquisition of Technisys, and basically they're building what they call the Amazon of the fintech world. They're going to offer you everything. They're going to bring in customers any way they can. So far, customer acquisition costs have been high, but they're going to bring in customers, get them on this wheel where they're trying to sell them any number of financial services, whether that be investments, insurance, student loans, home loans, car loans. We're going to have just about everything you could imagine as far as the financial space, the insurance space, and hopefully many related categories. I mean, if it's profitable, credit cards, another good one, personal loans. It's just the sky's the limit because we're going to own the whole back end. We're going to not only be very flexible in terms of what SoFi can do in terms of rolling out new features, but also in terms of what they can offer their clients. Smaller and larger fintechs, banks that are on very antiquated systems are going to be encouraged to move over to SoFi's platform once the Technisys, Galileo integration all happens. SoFi is already realizing cost savings from that, and that's only going to increase over the next couple of years. Just want to briefly mention SoFi used to be a student loan company. They are so much more than that. They really haven't been doing a lot of student loans. The student loans have been cut originations, I think, down like 66%. And then their personal loans have been up through the roof, and they've been making a ton of money on the personal loans because they have a banking charter. Their cost of the money they're lending is much less because they're able to lend out their own deposits. Speaking of deposits, deposits have increased dramatically. I think going from like I'm these are just off the top of my head, but like 1 billion to 7 billion over the course of a year since they've had the charter. Just want to take a look at what SoFi has been doing lately. You see, oh, excuse me. I'm going to move my happy self right over there so that you can see what we're looking at here. SoFi, beat after beat after beat with the student loan pause, with inflation. Doesn't matter what they throw at SoFi. SoFi adapts, they overcome. It's a heartbreak ridge scenario. Um, and look at their annual revenues 400, 500 million, up to a billion, up to 1.5 billion. And then quarterly, again, grow 317, 350, 400, and 441, with the losses at 110, 95, 74, and finally 40 million. I think we could easily see a net profit next quarter, and if not next quarter, definitely in Q3. Um, it's just a no-brainer. The math, when you're a bank and your controls and your discipline on who you lend to and the types of products you put out there are this good, you're just going to do well. And I think SoFi has the right model, the right management. It's proven in their growth. I think it was a brilliant move buying the naming rights to the stadium. They got a huge boost from the Super Bowl, the playoffs, football season in general. They are becoming a household name, certainly in Los Angeles, and I think as Los Angeles goes, so goes the country. But just wanted to compare the market cap at SoFi at 4.6 billion. I know SoFi does have some debt, and it's not a software company. So don't go nuts. But I just wanted to compare SoFi's growth, growing the top line at 50% with some of these other companies. Palantir, for instance, is growing at a similar rate. Um, their top line is actually growing a little bit slower. Their quarterly growth has been similar over the last 4 quarters. They made two big losses and then they actually made $30 million the last quarter, but they've had misses and then they finally just had a beat. But similar size company in terms of the sales and the trajectory of the profit. So I would speculate that the margins are there. But Palantir, instead of SoFi at 4.5, Palantir valued at 17 billion. CrowdStrike, market cap 30 billion. And again, I know this is software, I know this is cybersecurity, so you end up with those huge margins. Um, but SoFi is also a technology company. They're online, they don't have physical branches, so they're not like most banks. But again, just to take a look at CrowdStrike, they have beaten, much like SoFi, almost every quarter. It's almost too neat, their beats, but their annual sales have grown very quickly, from 9 to 4.5. That's very similar to the jump SoFi made. And then this would be the equivalent of like SoFi this year. SoFi is kind of right here where they were in 2002 at about 1.5 billion, growing at a similar rate, also making a loss. The quarterly revenue is a bit ahead of SoFi at 640, and they're losing a similar amount to SoFi. Their losses have been smaller, so the losses aren't really decreasing as the revenue goes up. Probably executive compensation expansion. CrowdStrike's a very good company. As you can see, they have extremely strong analyst recommendations, but just a little bit bigger sales than SoFi, similar growth rate, similar trajectory, and their market cap is 31 billion. SoFi again at under 5 billion. Just taking a look at a firm, this turd, the buy now, pay later, I think their market cap's about 3 billion. So they have two-thirds the market cap of SoFi, and they have miss after miss after miss after miss. Their revenues are flat. Year on year, the revenue's gone way up. Again, this is similar to SoFi. They had 900, 1.5. They went from 870 to 1.35, but their loss was 700 million last year. And then if you look, their quarterly revenues are basically flat. They were up a little bit last quarter, but their loss is just, look at, it's the opposite of SoFi's loss. $54 million loss, 186 million loss, a quarter billion loss, and then a third of a billion lost. And they still have a 3 billion market cap. I mean, it's absurd. SoFi is doing all the right things, and the market just doesn't care, doesn't give them any respect. Still trades them at book value. It's the Rodney Dangerfield of the stockman. No respect, I tell you. I take my wife everywhere. She finds her way home. Rodney Dangerfield was hilarious. Obviously, that has nothing to do with anything. Just taking a look again at Robinhood for another comparison in the fintech space. I mean, they're obviously trading um, platform, but their market cap is 7 billion, almost twice SoFi, not quite, but a lot higher than SoFi. And then you can see they've had miss, small beat, large beat, and then a big miss. Their annual revenues are basically went way up with the COVID boom. Everybody was trading like crazy. The whole Tesla run up. They made 1.8 billion, lost 3.7 billion dollars. Then the next year came down to 1.36, lost a billion. Quarterly, their revenues are behind SoFi. Their losses are decreasing but flat. Basically, the last 2 quarters are losing like 4 times as much money as SoFi. Their revenues are smaller. Their rate of growth is smaller, and their market cap is far larger. So SoFi gets absolutely no respect whatsoever from the markets. They're trading down near book value with 50% top line growth and incredible membership and product growth, incredible synergy coming up with this wheel strategy. I really think the customer acquisition costs are going to go down. And as the revenue continues to increase, it will make the proportion of stock based compensation decrease. And I think the present market cap, the market will realize the shorts will let go of the stock, and the market will realize that SoFi is going to continue to grow, and their margins are going to continue to be very solid, and they're going to realize huge cost savings with their technology acquisitions, and they're going to continue to diversify. And this is just a company that is going places. Obviously, the company ran the COVID kind of boom, insane times, up over 23 bucks. You know, all I can say is we're like, well, it was overvalued. You're crazy to, put it up there at the huge market cap. I guess that would be like 4 times the market cap, close to 20 billion. And then there's a big distance between there and $5. So just because it was overvalued at 23 doesn't mean it's not undervalued at $5.75. And as I said, Strong Arm Trading has put out a price target of $9.75 on the SoFi stock. DannyDealz, our lead analyst, stands behind that price target. It has been affirmed by executive producer of Un Poco Mas, Hurricane Lopez. We are standing behind our price target, 975 on the SoFi stock. We think it compares very favorably by other companies in the technology space, in the fintech space, in the financial space, and in every other space. We think they have a better business model. We think they have better management. We think the growth bears that out, and we are very bullish on the SoFi stock. Want to thank you for watching Un Poco Mas Strong Arm Trading. My name's DannyDealz. For Hurricane Lopez, we're signing off. You have a great night. Remember, this is not financial advice. This is only my opinion. I'm not a real financial analyst. I am just a curly-headed freak on the internet. So please, don't listen to me. Do your own research. If you don't know what the hell you're doing, buy an index fund. Talk to a licensed financial professional. Don't listen to people on YouTube. Don't be stupid. Have a great night.